How much of a disruption is likely from these tariffs?
Oh, I think in the short term, the disruption is going to be massive because the countries on which President Trump is imposing the tariffs are likely to retaliate because these countries are countries that have a deep relationship with the United States. So there is both gains to the United States and there will be gains to the other countries because of the deep relationship from tariff wars, in the sense that they will impose tariffs, there will be retaliatory tariffs. And I think retaliatory tariffs would mean that uncertainty across the world will increase because these countries are then linked to other countries as well. China is linked to so many other countries.
Absolutely.
Global value chain. So the disruptions in the short term, before they stabilize, I think are going to be enormous.
Also, Dr. Kathuria, what's the potential revenue then for the United States in the medium term? Is it going to offset some of the debt, and will it encourage this trend to continue?
No, I don't think the rationale for levying of the tariffs is revenue for the United States, although it will generate, I don't have an estimate immediately of the kind of revenue that it will generate, but I think the rationale...
Well, the trade that's being hit is about $1.3 trillion for the year. So
Right.
at 25% of that, you can just say on an average.
But if there are retaliatory tariffs by other countries, I don't know whether this amount will be realized because there will be substitution effect. There will be trade diversion. What was being imported from these countries may be diverted to other countries. So I think while the estimate may be $1 trillion plus, what will ultimately be realized by the United States could be lesser than that because it needs to accommodate the retaliation and the trade diversion effects of these tariffs. And we don't know that. But I think the primary intention is not revenue generation. The primary intention is to look at the trade deficits of the United States and encourage, as you were saying in your report as well, to have more production in the United States as a part of that package that President Trump is calling Making America Great Again, to reshore a lot of manufacturing to happen in the United States.
Dr. Kathuria, will the tariffs on China impact the supply chain to India?
Of course, they will. I mean, this is both an opportunity and a problem for India. The opportunity for India because of these tariffs is, so some amount of trade could be diverted to India. The question is whether India is ready to benefit from the trade diversion that happens from China to India or to other countries. And my sense is that, while we can benefit at the margin from some of the tariffs that are imposed on China, we'll need to scale up a lot because remember, China exports huge amounts, $300–400 billion to the United States. And therefore, to be able to absorb even a part of that export to the United States would require us to scale up. So therein lies the opportunity for India. But the cost to India is going to be as a result of the flooding in India of the trade that is diverted from the United States into India. So there could be there could be exports to the United States that could find their way to India at cheaper rates. So there's likely to be an impact on the dumping of Chinese products in India. Dumping I'm using in a loose way. Dumping of Chinese products in India. And at the same time, the opportunity for Indian exports to the United States to go up. But then that will have to contend with the fact that that United States is also planning to impose tariffs on India beginning April.
Okay, fair enough. But once it looks like everyone is going to be starting to raise tariffs across the world. So once a new tariff regime kicks in, with all countries raising or reducing tariffs, what impact will it have on prices in emerging markets? Because we are seeing the markets not able to react right now. I'm talking about stock markets, but also generally prices.
So generally prices, there will be an impact on inflation. And as a result of these tariff wars, there is likely to be creeping inflation. It will actually depend on the suppliers. Some of the suppliers may absorb some of the price hikes. Some of it may be passed on to the consumers. So it will vary by product, to the extent that there is big demand for, or the elasticity of demand is low, then the prices may be passed on to the consumers. To the extent that the elasticity of demand, or if there's not sufficient demand, some of those prices will be absorbed by by the producers themselves. So it depends on how much of that price is going to be absorbed at the wholesale, at the retail level, and how much of it is going to be absorbed by the suppliers themselves. Regardless, I think there's going to be an impact on inflation. There's going to be creeping inflation, unless a lot of this trade gets diverted towards bilateral trade agreements where a lot of duty-free imports happen as a result of countries having bilateral agreements amongst themselves. But I think that effect will be marginal. So to that extent, I think there will be a sort of impact on inflation over time that we will feel, because there will be retaliatory tariffs by most countries that United States trades with. Trade is, my perception of what fair trade is very different from somebody else's perception of what free trade is. So if United States feels that it's being unfairly treated, China could also feel that it's being unfairly treated by the United States, because there is a process now that has been established in global trading process, which is the WTO, and you cannot unilaterally begin to impose these tariffs.
A final word, a quick word in, Dr. Kathuria. You did mention that the US really wants to try and balance its trade, but its consumption is much higher than its production, and the dollar value is pretty high, as we know. It's making their goods expensive. So is this even possible?
It's not. I mean, they will begin to feel the effect very soon, because as a result, as you know, anybody who has visited the United States would know that most of the products that are sold, to the common person, to the average person, middle class person, most of those products are made in China. Be it textiles, be it footwear, be it toys, even groceries nowadays, you will see a lot of them that have been sourced from China. And to that extent, those prices will begin to be impacted. It will begin to impact the consumer wallet sooner than later. And I think there will have to be some then intervention by the United States to be able to manage that process of increase in inflation in the United States. So I don't think this will play out to the extreme as it has been planned, but these are, negotiating strategies to garner.
Okay, we'll have to leave it there. Thank you very much, Dr. Rajat Kathuria, senior economist. Thank